All right, so I want to go over one of my A plus setups. This is a bear or bull flag, and this is a fantastic example of it. So here we're looking at the NQ on the 5-minute chart. And let me just explain my indicators first. This is how I set up all my charts. I always have the daily moving averages on my intraday charts because these are very important levels. This would include the 10 EMA, the 20, the 50, and the 200. This is the 50, this yellow. The 20 I have as blue. The 10 I have as orange, and then the 5 EMA is always white for me. And it's always solid color, so I know the difference. And then on the actual chart, whatever the chart time frame is, I have 3 moving averages. I have the 10, which is this white dashed. I have the yellow, which is a 50 EMA, and then the 200, which is red. And then the solid purple line is VWAP. And that's all I use. I don't use anything else. And I just want to see price react to these different moving averages on the daily and on the intraday. So what I'm looking for in a bear or a bull or bear flag is I want to see a nice down move and then an orderly pullback. So here we have a big down move. We kind of like consolidated just for a little bit on the 20 EMA daily, and then we push down again. And then you can see we have this nice orderly pullback right here. And then we also have it on volume that is going down. So the volume isn't like more so than the down volume. This one's about is equal right here. But then we start getting a nice little pullback, and this starts getting smaller. It's very orderly pullback. And then we go up to the declining 10 EMA, which it bounces off that. So that's like a confirmation. And then what I want to see, if I can just zoom in, I'll really zoom in here. What I want to see is the break of this level right here, the low of this candle. Because one of the things is with these bear and bull flags, you don't want to enter as, like, let's just say two bars form and then it keeps going up, and then you enter here and you're anticipating that it's going to continue in that direction. That's not a good way to enter. The best way to enter is let the bars form, because you don't know how far this is going to go up. And then once you have a break of your last candle's low for a bear flag, and for a bull flag, it would be the break of the high on the pullback. That's where you enter. And then your stop would be above here. Now, you might have to do multiple entries if you're trading futures, just because this is a large amount right here. So we have this move is 35 points. If this would happen to go down, wick back up, and then eventually come down. So sometimes you'll have to enter multiple times here. But usually what typically happen, or what most of the time happens here, is once this closes here at this top, you'll see that this will try again, and then it'll come down. I mean, it might have some volatility in here, but usually once it's here, it's not going to wick all the way back up again. I mean, it could, but it usually doesn't. So that's why you might have to have a few entries if you don't want to have a 35-point stop. And then you would target the break or this candle here. I would just trail my stop. So as I'm starting to get into profit right here, I would be, because my stop here, let's just say if I entered here, I would have a 20-point right there. That would be my stop. And I would be targeting right here. So that's like a 3.32 to 1 risk to reward. Anything over 2 to 1, even 1 to 1 is good in the futures market. But as this starts moving, I'm trailing this, and I'll give it a little bit of wiggle room, like it pulled back here a little bit. That's fine. And then you got a nice clean move. You could probably trail most of this the whole way down until probably right here. This retracement would definitely take me out. So that's like a 6 to 1 risk to reward on a nice bear flag. So again, or what I want to see is a nice down move, an orderly pullback, and then a break of that last candle. And then on the pullback candles, I want to see lowering volume. I don't want to see this volume getting higher because that's going to invalidate it. That means that this is probably just a V-shaped recovery is what's happening. And you don't want to see these bars like really big here with lots of volume. Now, the other thing that's super important is you want to see multi-time frame alignment. So right here, this is the 15-minute chart. You can see that this is in a nice downtrend, and here's our pullback right here. You can actually see the pullback on the 15-minute chart. So that is perfect alignment. And then we want to look at the 30 is just one big down candle, and that's the same for the 1 hour. So all time frames align. The 1 hour, the 15, and the 5 all look bearish. They're all going down, and within this down candle, you're capitalizing on that move. So let's look at some other examples of this. Now here would be like a bull flag, and there's several of them here. And what you see here is we have a nice move up here, and then we start getting a pullback. But look at this. This pullback is on elevated volume. See how the volume down here, if you look at the bottom of the screen, the volume is increasing. So that's almost like a reversal. I would not trade that. And then let's take a look at this. We get a nice move up, and then we get a big retracement all the way back. So the volume really doesn't go down. It like stays the same. It actually goes up a little bit. So that's not a good flag either. Here would be a good example. So price action starts out a little bit choppy. We come down to the 200 EMA on the 5-minute, and then we start getting an up move. We break up through VWAP. Then we start seeing reduced volume on the pullback. This is a pretty big bar here. So at this point, I'm just like monitoring it. I'm not doing anything. Then I see another pullback on lower volume, and I see it wick off of both the 5-minute 50 EMA and also VWAP, which is a very good sign. And it put in this nice hammer candle. So it came down, grabbed liquidity here, rejected off this, or bounced off this, and all the buyers pushed it up. So this would be a nice entry to see the break of this candle right here. So that's where I'd want to enter, and I'd have a 20-point stop. And it looks like this wick back down again, right below the 10 EMA, and then say 20 points would be my max loss. And then targeting this high would give me a 2.6 to 1 risk to reward. And again, I would trail this for as long as I can to just see, how far we can go here. This, we had a little consolidation, but it didn't really pull back that much. I mean, this would have been an amazing move. You probably could have taken this all the way up to this level. And if you look at this, you'll see this is a very nice uptrend that you can see this on the multi-time frames as well. So this is Wednesday the 26th. Let's look at the 15-minute. Now on the 15-minute, this to me looks a little bearish just because we have this big top wick here. So you have to look at it in context with multi-time frames. All right, so I wanted to take a look at just a few more examples here. So here's another one on the 5-minute time frame where we come up. This is the daily 20 moving average. This is why I have them on my chart, because look at how price reacts to it. I mean, there's a lot of liquidity in these areas. They act as support and resistance. So we get a nice push up here, and then we came back down on this moving average here, the 50 EMA. And this is pretty interesting. I do like this. It's kind of like in larger context, a bigger flag if we see this whole area right here. But price is kind of going sideways, consolidating a little bit. I don't like how it breaks down here. This to me could just be a change in trend, but then you see it kind of like put in this nice little undercut and then finish above the 50 EMA, and then we have a nice candle to the upside right here. But this is a little too sloppy to be an A+ setup for me. So let's take a look at one more. Okay, last one. This is a nice one. So on this day, you can see that we first go down, we wash out, we start building back up again. we consolidate, we can't really go higher, and then we have this nice move up here, and then we get a nice break to the downside here. So this is a very nice down move, and then we just start seeing declining volume and a nice break to the downside. So one thing I'm going to point out here, and this is why it's so important to really learn how to read price action, because it just helps you with the overall context of what's going on. And there's little subtle things that you might not pick up early on in your journey, but the more you just like look at how charts form, you read price action, you study it, you start picking up on these little things that give you clues into what's happening. So in this example where we have this bear flag, I'm looking at it. I'm also looking at the price action at the top here. So let's just go before that. So we have this move up here, and we keep making a new higher high. And so here we have a little pullback, and then we make a new high here. Then we have another little pullback, and then price comes up here, and it doesn't make a new high. And so I'm also looking at all these bottom wicks. Like here's the support. The support is in this range right here, where we have like, here's our bottom, and then like kind of here's the top of the wicks. This little box would be like, there's buyers in here that are pushing it up, right? Or holding price up. But there's like a big seller here, or multiple sellers. And so what happens is the price fails to follow through. It can't make a new high, so it's breaking down. So it's breaking down all these, flushing down. There's probably a lot of like stops here. There's probably a lot of people getting long, where people saw, okay, this could be a potential bear flag. And so a lot of people probably got long here and put their stop underneath this low here. People were getting long in this area, and then price just breaks down because it can't go any higher. It runs through all these stops, it flushes down until it finally finds support here on the rising 5-minute 50 and the 200. And I personally, I love watching the 5-minute 50. I think this is very heavily used in algorithms from institutions. So I like to have this on all of my charts. I think it's just a super important moving average, specifically the 5-minute 50. And if you're on the 1 minute, the 550 kind of equates to the 200 on the 1 minute. And so then price moves back up. We keep making new highs. So here's a high, we get a pullback, we get this, a little consolidation, but it's still a higher high. And then we come back just a little bit, but we don't break this little consolidation, so there's support right here. So this, I think, is another important area because we're supporting this structure right here. There's buyers that are supporting this level. So then we come up, we make a new high here, and then we have a nice pullback to this support where buyers are getting long. And then what happens is we come back up again, and at this point, this is a failed follow through. So we just failed to follow through to make a new high. So this is, at this point, I'm thinking in my head, bearish, because we're not making a new high. And I'm also thinking like, let's wait and see, because price could easily just come back down here, consolidate for a while, then make a new high. But I'm also looking at the context of it where I'm like, okay, the daily 5 EMA is right here. And this daily 5 EMA isn't 100% accurate because price action hasn't closed for the day. So this is just showing like kind of where it's, approximately where it's at. I mean, it could be just like in this area. So it could be right here where it's just like it's price isn't going to break through. It's just acting as a resistance. But I have on my chart that I have this selected where you can say wait for the time frame close and to get a more accurate picture. But I want to see it like as is in real time. So now I'm thinking, okay, we failed to follow through, so that's my first trigger. Like maybe we're going to get bearish here, but I'm still not completely bearish. Let's wait to see what happens with this price action. But I see this support level here, so I want to. If this breaks, then I'm definitely thinking bearish. So what happens is we do break here and we get a move to the downside, and so we take out all of the stops that would be here, all the people that got long, because these longs are trapped now. Also the people who got long here, we flushed down and then we came back up. And then what is happening here? So now I'm bearish. So I want to see this support which was support prior. I want to see it act as resistance now. So we break through here and then we start forming this little bear flag, but it never breaks above the support. And then now I'm looking to get short in this area right here. Like I said before, like the break of this candle. And so that's how like you read price action. It can seem like very easy, where it's like, oh, you see a down move and then you see an orderly pullback and then you go down. But you have to take in, I mean, that's one thing, but you have to take in the overall context of what's going on, like I just said, where, I mean, there's a lot going on here, and there's little nuance, like you might not see that this is a failed follow through at first, you know, like, oh, we didn't make it. So this would be the first trigger. So you know right here, before it even breaks down, that you're thinking in the back of your head, we could get bearish here. We could not make a new high, so we could get bearish. Or we could go in a longer consolidation like this and then explode to the upside. But I'm thinking about it. That's the most important thing, is I have it in the back of my head, because I'm just like reacting to what price wants to do. I'm not trying to force anything here. And then so I see that it does hold here. This is a nice clean break. You get short here, and then we do have another retracement, but it holds on this breaking level, this area right here. And then so you can see, like, every time, so we have the first wick up, which is right here, it goes down. We have a second wick up and it's lower than this. So sellers are pushing this down. So to me, I'm thinking like, okay, we're consolidating on the 50 EMA here. And now the 50 EMA, which was once going up, now has started to flatten. And it's pretty much flat right here. And sellers are just, look at all these top wicks. Sellers are pushing this down. So this is like encouragement to stay in the trade. And then we do see a break to the 50 here. And so what's our next point of resistance? Well, it's probably the 200 moving average, which we wick right off the 200 moving average. So that's what I'm kind of thinking. And I'll also use like trend lines, so I could say like, okay, here's the top of the move, here's the next. I want to see it kind of follow like this trend. I don't want to see it break this overall sell-off trend. So hopefully that gave you a little more context and what I'm thinking. That's why it's so important to learn price action and to learn all these little nuanced stuff, because you can just see I guess it's like kind of seeing into the matrix a little bit, where it's like you just start seeing it for what it is, instead of just like, oh, we have so many red bars and then a couple green bar pullback on lower volume. The context overall makes so much so much difference. All right, to wrap it all up, when you're trading bear bull flags, you want to see multi-time frame alignment. You want to see a nice orderly pullback on declining volume. And then you want to see that your next area, your take profit area, it has a decent risk to reward. That could be the last high. That could be another moving average, an important level. You just want to make sure that whatever you're targeting, you have enough profit there. So hopefully that helped you out, and we'll see you in the next video.